think robotics is going to replace 50% of their workforce over the coming decade. Amazon's operating margins are 12.4%. They were 7% 8 quarters ago. 7% to 12% is a big deal, but 12% operating margins for a tech company is laughable. So that needs to get to 20 to 25%.
GM, good morning. Welcome to the Milk Road AI podcast, the AI podcast that helps you figure out if an AI company has a moat or just a very enthusiastic PR team. I'm your host, Kyle Reedhead. Today's guest is Amit, a sharp investor focused on stocks and AI, and a fellow podcaster who's interviewed some of the biggest names in the AI industry. He was early in companies like Palantir and Robinhood. That's really how he's built his name. Incredible investor, incredible thinker in this space. And so today we are going to discuss some of those names, some of the biggest companies in the world like Amazon. We're going to dive into Palantir and Robinhood. We're going to talk about what Amit's favorite trades are for 2026. And then we'll talk about some of the things going on in the space of AI, like the Anthropic going public versus OpenAI going public, and just so much more. So guys, check this one out. It's going to be an absolute banger of an episode. But before we do, if you've been enjoying this podcast over the past few weeks, we've got some exciting news for you guys. We just launched a free AI newsletter that'll help you keep up with the bigger moves in the space and learn how to invest in the future twice a week. Okay, the first edition dropped today on Wednesday, and it dives into the soap opera level drama currently unfolding between Google, Meta, Nvidia, even Amazon. And so a lot of things happening in the GPU space. And so we sort of dive into that AI infrastructure layer in that, but we'll be covering tons of news, tons of investment side of things and markets. So if you're interested in investing in AI or in markets in general, this is an absolute must read, and it'll be in the typical Milk Road style like we have with Milk Road Crypto and Milk Road Macro. Now we've got Milk Road AI. So sign up for free and get Friday's edition straight in your inbox. It'll be every Wednesday and Friday. All right, guys, thanks so much. Let's bring in Amit. Amit, thanks for joining, man. Glad to have you on the Milk Road AI podcast. How you doing today?
I'm doing great. Thanks for having me on. I've been following Milk Road actually for the past couple of years. So you guys have been very, very influential in the crypto ecosystem, and happy to be on the show today.
Thank you. Appreciate that. Yeah, well, we're trying to do the same playbook over in the AI world. I know you do a hell of a job there. You cover so much, and you've been doing it for a long time. So we appreciate you coming on the show and sharing your insights with the Milk Road audience. Let's just get right into it because there's so much happening in the AI space. It's literally insane, and we only have a short period of time here. Let's just open the floor for you first. What are you seeing right now in the AI space? And there's a lot of talk about, is it a bubble? Is it not a bubble? There's craze of all these new things launching. There was scare today around, Microsoft's forward guidance around their services. What's your take just generally on AI right now?
Yeah, look, I think the question is still up in the air in terms of what are the use cases going to be and how did the use case manifest into actual business value. I think one thing that is undeniable is that the reason these companies are spending the amount of money on data center build out and GPUs and power grids, et cetera, is because they feel there's potential. And so the question then becomes, as an investor, where do you think the scale is of that potential, either to the upside or to the downside? And I think there's some things that have shown massive potential, like self-driving, which is trained on a lot of AI chips. I have a Tesla, and it's completely changed my life having that car drive me around. And if that could replace the driving TAM for Ubers, taxis, et cetera, I mean, that just seems like a massive, massive opportunity that needs a lot of compute. And then there's other things like chatbots, which I personally feel has a lot of potential in my life. I can't live without them. But to some people, they might not be as exciting. So I think the growth prospects of the foundation model companies like a Claude and an OpenAI are going to make the argument for why AI is real or not. But we have a lot of things coming, like enterprise workflows, robotics, FSD, et cetera, which makes me think more often than not, this is real. Is it a little frothy in certain areas? Sure, but that doesn't mean it's fake. And I would struggle to short the entire market on that premise.
Shorting AI right now seems like a wild move at the moment. But yeah, I mean, I think there's so many use cases that are happening right now. Of course, some of them are kind of dreams or are going to exist years from now. But I don't know, personally and in my workflow, the amount of AI I use is just it's not enough. Every day I'm like, shit, there's more that I can be doing. There's more that I can be doing. And I think every business is going through this, which just kind of tells me.
I literally subscribed to a third LLM yesterday. I already have two. Yeah. I had to subscribe to a third. Because it was better than the other two. Now I pay for three of them.
And so even if I know there's a lot of attention on the AI build out, like the infrastructure side, and a lot of those got crazy valued for a little bit here. But I think even if that might feel a little bit bubblishy and that doesn't scale to the point we thought, there's still the earnings that are improving from basically any company, even if they're not an AI company, as long as they're using AI, like, man, can you save profits? And so I see it being very difficult for the stock market in general to have a massive, long, drawn out bear market when you have every company in the world beginning to just starting really integrate AI, because the profitability and the earnings improvements that creates is just like, it's so big. And I feel like we're just getting to the start of it. Like, if you listen to the Nvidia earnings call, was it like 2 weeks ago now? They sat there for like 30 minutes and just named off every company and how they're integrating AI and how it's making their business more successful. And so I'm just like, how the heck do you go in a bear market when you have that sort of technological change happening within companies? So there's that side of it. The other thing that I want to get your opinion on was recently, I think it was yesterday, Anthropic came out and said they're potentially going to IPO as soon as 2026. So we now have two of the biggest and sort of like, let's call it, most important AI companies in the world that are private, Anthropic and OpenAI, both saying, hey, we're raising hundreds of billions of dollars and we're probably going to IPO. Anthropic was around 300 billion or 350 billion, and then OpenAI is looking at like $1 trillion IPO. What are your thoughts here? Do you think this is a good idea, bad idea? Valuations make sense? Like, kind of what's your thoughts as you first heard this?
So I don't have enough understanding of how much revenue and gross profit and margins these companies have, because none of that's public. But the reported growth rates, Anthropic was doing $1 billion in revenue in January TTM. Now it's $8 billion, projected to be 26 next year. And we're talking about 800% growth going to 400% growth, which is a decrease, but 400% is still pretty damn good off of a big base. So I think that growth rate is something that the public markets have not seen since the internet companies. And so, yes, it makes sense to go public because there's going to be a lot of capital from a lot of retail investors in particular that have been dying to get access to these names. So I think it makes sense from that perspective. Now, when you become a public company, the public scrutiny and the 90 days per shareholder meeting, the quarterly calls, like, a lot of that stuff is tough to live up to. And so I do wonder that if they're going public just to get the money, are they going to be able to sustainably grow the share price while being public? Because the share price is a whole different story when one headline comes out, and Anthropic's private valuation is probably fine, but in the public markets, the stock will immediately react. The other reason I think the IPO makes sense is because you got to do it when it's hot. Like, at the end of the day, these companies need to take advantage of the liquidity. You cannot wait until 2030 if the sentiment around AI is hot in 2026. So I think it makes sense. I think they need the money. If they do go public and they take a lot of those public funds and put it into Nvidia and AMD and Google TPUs, that keeps the broader Mag 7 trade alive. And so I think it would make sense, but ultimately we're going to have to see if that happens next year.
Okay. Speaking of Nvidia and the TPUs over on Google, we had some news this week from Amazon, which they're kind of getting into the mix as well. And I know that you've been quite bullish on Amazon for a little while here. I'd love to just get let's start kind of zoomed out take on what Amazon is doing with AI and how they fit in this whole like AI dominated sort of industry and world. Walk me through what you're kind of seeing in terms of what Amazon is doing, and then we'll talk about that as an investment afterwards.
Yeah, my Amazon thesis relies on two sort of macro things happening in the company, which I guess bleeds into the investment thesis, but this is also kind of what they're doing as a company, which is why I got excited for them back at around $212. This was late September. First of all, I just didn't look at Amazon stock all year because I was focused on other things, and I saw it in September, like, it's up 2%. I was like, what? There's a bull market. What's going on? And so I started digging into the company, and I'm like, what's the narrative that's hurting them? And the number one thing was AWS is losing market share to GCP and Azure. So I did as much research as I could, and I made the conclusion that I don't think this is necessarily true, or if it is true, it's not true enough to the extent for the market to give them a 2% return when the S&P is up 16%. And so I bought the stock. And then on the call, Jassy's like, we are re-accelerating AWS for the first time since 2022, which was the big thing that Wall Street at least wanted to see. For Google, they needed to get the DOJ stuff off their back. For Amazon, they needed to reaccelerate AWS growth. Amazon quite literally was the king of cloud. 2006, AWS started this whole cloud computing revolution. And so it made sense that was accelerating in the age of AI. So I think that is something that's really exciting to me about Amazon. The second thing is robotics. I think the simple story is I think robotics is going to replace 50% of their workforce over the coming decade. Amazon's operating margins are 12.4%. They were 7% 8 quarters ago. 7% to 12% is a big deal, but 12% operating margins for a tech company is laughable. So that needs to get to 20 to 25%. I think replacing a lot of humans with robots that don't need all the expenses that comes with humans, there's a philosophical and ethical question about that. But the business use case is operating margins go up, net income goes up, market cap should reflect that with a higher PE multiple. Also, it's trading at its lowest EV to EBITDA multiple in history. So I think
interesting. So you think it's basically just undervalued, and the fear or FUD around Amazon just didn't kind of make sense. And yet, as Amazon always does, they continue to ship and they continue to make their company better and better and better. And your assumption is they're going to do that in the AI world, AI and robotics world, which is really their key unlock is robotics. But they also launched their own. I haven't read it yet, so maybe I'm sure you have because you just did like 3 hours of talking about AI on your YouTube live. Did they launch their own GPU to compete with Nvidia and Google, or what happened here?
Yeah, so it's a custom chip, an ASIC, a Trainium chip, and it's not necessarily rivaling Nvidia's general purpose GPU that is sold to millions of customers, but rather it's very specific AI workloads, particularly for AWS customers. Amazon, just like Google has with TPUs,
Yeah.
maybe trying to get into that market, and it makes sense. They should be doing that, and they should be getting efficiencies over Nvidia, and that will force Nvidia to be even more competitive. But the market is like. And I think that's where we have to take a step back. If the market itself is as big as we all think it is, if AI truly is bigger than the internet, and you either agree with that or you don't, but if you agree with that, then the market's going to expand, competition is going to increase. Nvidia's not going to. This is not bearish Nvidia to the point where Nvidia is going to lose market share, but Nvidia will lose some market share. But if the market's growing, those are still meaningful markets for people to compete in.
Right, absolutely. So what is Amazon today? It is a $2.5 trillion company. What is your expectation for a lot of these big, like the Mag 7 companies? You've got Google's gone up almost, it's added like 2 trillion in market cap this year, like since like April or something. It's pretty crazy. So it's like getting close to a $4 trillion market cap. Nvidia is floating between 4 and 5, Amazon 2.5. Where do you think these things are going? And we'll talk about some of these more specific companies afterwards, but I'm just curious, like, I think a lot of people struggle to go, oh, I'm going to buy Amazon. It's 2.5 trillion, or Nvidia, it's 4.5 or 5 trillion. Are they 10 trillion in a few years from now? Are they 20 trillion? Like, how high do you think these things are going? Or does
It's
something
hard.
stop them?
Well, it's hard to be the person that says these companies are going to be 20 trillion because you just sound crazy and people. It's hard for them to take you seriously. But I genuinely believe that the rich get richer.
Yeah.
I think the trade for 2026, and I'm still trying to formulate my thoughts on like how 2026 will play out. But I think Meta, Amazon, and Nvidia are my three Mag 7s going into next year. Meta and Amazon barely up this year. Nvidia, I just think because of the AI bubble fears, this one continues to trade at a discount to where they need to put up the earnings to get a reasonable premium. So I think the rich get richer. Now, the question is there something that happens over the next decade that fundamentally stops Microsoft, Amazon, Meta, Nvidia from getting as big as they are? And if that does happen, I think we have a problem with the entire economy because these stocks are the economy. And for everyone saying that they're not an economy, for everyone saying that they're not going to, or they're not a major contributing force to the economy, you're just wrong. Look at the balance sheets, look at the net income, look at the cash flows, look at the daily influence they have in our lives. Instagram, 3.8 billion users, Amazon, like these are the Google search. These are the defining companies of our lifetime. Maybe there's going to be a new 7 when we all die, but for now, it's these guys. So yes, I think they're the trade for the next 5 years.
Interesting. Talk to me about Meta. So last week we had we talked about Tesla, we talked about Google, we talked about Nvidia, and so I was like, okay, let's talk about Amazon today. Meta was one I wasn't sure if we should talk about, but I am excited to talk about. Meta has give me your thesis on what Meta is even doing right now. They're spending a heck of a lot on AI, but they're definitely not the like. When you go to use AI, you're really not using a lot of Meta products today, except unless you're like buying their glasses. But for the most part, you're probably using Gemini or ChatGPT and a few others. But Meta's not really in that mix. So what do you think that they're doing? What is their big plan? Help our listeners kind of understand their play here.
Yeah, the thing about Meta, and this is what I did buy the dip on Meta, so it's down from like 750. It got to below 600 at one point 2 weeks ago. Now it's at 620 or 640. I bought the dip because I don't want to bet against Zucks. And this is a Mag 7 that's now trading at 19 times forward earnings, which is not a bubble to me by any sense of the imagination. Has 4 billion people using their products on a daily basis and is growing revenue 26%. I mean, we're talking about a company that's going to do $200 billion in revenue this year, about 50 billion every quarter. That's growing at 26%. That's trading at a 19 times.
Crazy.
19 times 4, like it ad impressions are up 10%, at price per ad is up 14%. So when you think about it from that perspective on the advertising front, this should be an $850 to $900 stock. And that's what a lot of the sell side equity reports say. The reason the stock is down, and I was actually talking to my friend who, his name is Sebastian, Meta is his top position. He's been long since 200. He's not buying the dip. And when I asked him, why are you not buying? He said, because I'm actually afraid that Zuck's is spending recklessly and he doesn't have a plan for this CapEx. And
Right.
I can't agree with him because outside of advertising, glasses are a dud, metaverse is a dud. Like, what are you spending $72 billion to do? Now, is advertising enough of a use case to be able to justify that $72 billion in CapEx? Yes, because it's growing 26%. So obviously the AI targeting is what's creating that type of momentum. But I think the street is like, we want something different. Google has cloud, they have Waymo, they have TPUs. Microsoft has cloud and Copilot, which maybe is a hit or miss. I guess we're going to see. Amazon is cloud, Trainium, they have their e-commerce. Like, what do you guys have outside of advertising? And I think until Zucks answers that, there might be an overhang on the stock.
Right. Interestingly, their ad revenue is improving, as we heard again from the Nvidia calls, that it's improving a lot because of AI, right? So they're kind of what we talked about at the beginning of this, which was like companies integrating AI and using it in their existing products can improve their earnings, which is exactly what they are doing. But they are spending, I don't know, what is the amount that they've spent in the last couple of years? Do you know any of the figures there on AI specifically?
For Meta?
Yeah.
From my understanding, it's about 160 billion. Might be a little wrong on that, but
And I think their goal is 500 billion or 300 billion by like in the next 3 years, right?
I think Zuck said 600 by 2028. There was this video where he said if we misspend a couple hundred billion,
yeah,
oh well, and it's like, okay, oh well, because the opportunity is so big, but like, it's concerning.
Do you have a hunch on what their big product is going to end up being? So as you said, they tried the glasses. Well, first they tried VR, didn't really take off. They spent a lot of money and capital on that, right? I mean, it's not really doing much. Then they tried to do glasses, which are kind of, for those that haven't tried them, it's basically glasses with some like kind of AR in it, like augmented reality. Plus there's like AI, so you can kind of talk to it. So instead of a chat bot where you're typing, you basically talk to your glasses and then you can like hear it speak back to you, which is honestly kind of cool. I tried them on. They're a bit nerdy looking, but like ultimately they're pretty sick. But they haven't really taken off either. They now have a partnership with Oakley. And so they're kind of more on the sports side of things. Like, so glasses when you're like running or you're playing sports. And so there's some valuable ideas there, but again, has not taken off anything like ChatGPT or Gemini. Do you think there's room to run on those products, or do you think it's something net new that they still need to create or haven't launched yet?
So I'm not a believer in the glasses. And I say this as someone who wears glasses. I really don't think people are going to give up their phones and the thing that they use every single day to put on something where they're like interacting with like their text messages by looking into the air. Like, I don't see that vision at all. I think there's a gaming use case, there's a healthcare use case. I don't think there's a consumer every single day you're using it on a daily basis type of use case. So Glasses are a dud to me. Metaverse is not real. I don't know why they haven't shut down Reality Labs, but it's not happening. So then the question becomes Llama, right? Which is their open source LLM that they worked really hard to train, and they spent all these billions of dollars for poaching researchers from OpenAI to come help build them. But they're not going to win the consumer LLM race. Like, no one's going to Meta AI over GPT, Gemini, or Anthropic. I mean, the model would have to be so phenomenal that people have to open up. So if it's not a chatbot and it's not glasses, I don't think there is a consumer product right now that Zucks meaningfully can give to the market that is a brand new business model that billions of people will interact with. It is his job to figure that out and convince the market that it's going to happen. But genuinely, I don't see it. Now, I still don't think that's a reason to be short Meta or be bearish Meta, because it doesn't need that.
Right.
And if they stop the CapEx and the second he says we're going to pull back spend, Nvidia's going to go down and Meta's going to go up because they're going to get a lot more free cash flow. But I don't know what that new product could look like.
So your bullish thesis is more just around them improving their existing business model, and then thus them also being a little bit oversold right now. And so your 2026 trade, as you said, Meta was one of the three there, is based on that, not on some brand new product that's going to change AI.
Yeah, and it's also because like there are two places in the world to go to advertise: Google and Meta. Yeah. There's a lot of other derivative ad companies, but that's it. They are the ones that have figured out how to get billions of people using their product. So it's like that business is never dying. It's just, can there be something complementary on it to make the street happy? The other dark horse is Meta ends up creating a cloud, maybe not a GCP, AWS type of cloud, but a smaller version, which could be a significant line of revenue potentially.
Interesting. Very cool. Okay,
they have a lot of excess GPUs, so theoretically they could, right?
Right. Yeah. Good point. You were very early. Well, I don't know how early you were, but in Palantir, I know it's a big thing that you've been talking about. We have not talked about that on the Milk Road AI show yet. And so first help our audience understand what the heck Palantir is, and then help me understand why is this thing trading at like, I don't know what the PE ratio, I haven't looked in a while. It's like 400 or something. Like it's crazy, right? Like I think it's higher than Tesla. What the heck's going on with Palantir and why is it like this?
So Palantir is a company that has changed my life. I kind of built my entire social media personality brand off getting this one right. I think in the finance space, you have to be right on a name to break out, especially in the stock market world. Palantir was a name I started covering at 25, went down to 6, quadrupled down my bullish thesis at 6. A lot of people kind of left the space because they thought it was dead. And there was just something about the company from a philosophical perspective that really drew me to it. And, the stock ended up doing what it did. And so it just built this amazing community for all these people that were long on the story. At its core, Palantir makes sense of your data. So in a world of AI, you have all these LLMs that are helping you try to understand how to like do something or how to automate something more appropriately inside of an enterprise. And enterprises are the real clients that are actually, going to pay big dollars for these products, not just the consumers. In order to make sense of your data, you need something that Palantir has created for the past 20 years, which is called an ontology. At its core, an ontology takes all the existing data inside of an enterprise, whether it's a government organization, a supply chain data inside of a factory, a scheduling for nurses on a hospital floor, all of that stuff, when you're putting it together, you need to be able to make sense of it and then operationalize the large language model to then automate a lot of different things that are happening in the business and empower the workers that are trying to make sense of that data. And I know it sounds kind of boring and like, really, this data company's worth $500 billion. But when you look at the use cases and when you look at the gross margin profile on Palantir, the fact that they're growing their margins at 51% and their top line revenue at 63%, we have never seen a software company get that type of efficiency, a rule of 40 of over 90 in your top line and your bottom line, and do it sustainably. And I think the bet right now on Palantir is if data is the new oil and AI is making sense of that data and Palantir has the software infrastructure, one could call it the AI infrastructure to make sense of all these LLMs inside of a hospital, inside of a factory floor, inside of the IRS, which they have a contract with. How big is that TAM? Well, that TAM is probably north of $1 trillion. And so then how much of the TAM can Palantir capture? Palantir has 900 customers. Salesforce has 40,000. So I think the bull thesis is that they're going to continue growing into being able to do that. Now, your argument about the PE ratio, this is something that I have been trying to analyze for the past couple of years right now, because at some point you think a stock is undervalued and then the market starts paying pretty aggressive multiples and you're like, why is the market paying this much for the company? And I think it comes down to two things. Number one, it comes down to Alex Karp. I think he's one of the greatest founders the world has ever seen, and he has really cultivated a story around the company. And the simple story is summed up as he wants to make sure people understand that Palantir doesn't get paid unless their customers produce results, which is contrarian to the software industrial complex. Like, companies want to get paid their VIG before they show you any results. And Karp has such a belief in his product, such a belief in his mission. And one of the other core missions of Palantir is protecting the West, which is another reason I think they get a multiple, that he has been very honest about the fact that we don't have a sales force. Our product sells itself, and we're going to continue to make sure that we win in the question of product. So I think a lot of people buy the stock because they simply love and support Karp and they believe in his mission. And then second is the growth rate being as sustainable as it is. There's not any other AI software name that I know of besides Nvidia, which is not really software, that is growing at these levels. And so because Palantir is kind of the only one left and they really don't have competition, that's why they get their multiple.
Interesting. So Palantir is actually probably very similar to like a Tesla in the sense that not in terms of its product necessarily, although it has great products, but more that it has this like very strong community and like, this like thriving user base / investor base that just like loves, Elon in Tesla's case. And so like they're just buying and they don't care what the price is. It's almost like Bitcoin, right? It's like people that just love the thing. It's like a religion around it essentially.
Yes. Yeah. And I think that religion is backed up by growth. Like this is not a stock that is not putting like at some point the market's not going to pay a multiple if they don't see the growth, and the growth is there. Sure. If it can sustain, then the premium probably expands.
Okay, interesting. Very cool. Let's flip to Nvidia, because you mentioned that was the third of your three. So you said it was Meta, Amazon, and Nvidia, I think, for 2026. Why do you think Nvidia continues on its growth tear?
So Nvidia is trading at 25 times next year's earnings, which is cheap for a company of their caliber. Nvidia has gross margins of 73%, which a hardware company doesn't get to have those margins, but because of Nvidia's moat, they get to do that. And they just grew revenues at 60%. Data center revenues of 51 billion. Street wanted 49, beat that by 2 billion. Street wanted 61 billion on the guide for Q4. They came in at 65. I mean, I don't know at what point the Street's finally going to realize that Jensen is not lying when he says AI is real. Jensen is not lying when he says the demand is real. And Jensen is not lying when he says we have way more demand than we have supply. And so, yes, the stock's worth 4 trillion. Yes, it's done incredibly well. Do I think it could be worth 10 trillion one day? Sure. But should the stock be worth probably more than what it is today on an intrinsic basis if you just put a more reasonable PE on it? Yes. I think the reason it gets discounted is because people think that they're not going to be able to keep up that growth, which is fair because semiconductors are cyclical. And maybe Microsoft wakes up one day and the headline is real that we're not buying any more GPUs or we don't need as many. And that could be a bad day. But given all the data I've compiled, and I think part of the reason that people watch my show is that we just look at a lot of data. Like we really try to, it's not just narrative. We really, whether it's good or bad, we try to compile it all. And all the data I'm seeing is that the supply of AI is not as much as the demand.
Right. Can you help our audience? So a lot of our audience is previous crypto investors, and they're trying to diversify out and get into the AI as well. And the question I always get is, man, is it crazy to be buying Google and Nvidia at these levels? Like they're already the most valuable companies in the world, whereas a lot of our audience, anyways, used to buying these kind of smaller, whether it be altcoins or very growthy things, and so. When you think about investing in AI, are you mainly just Meg 7, like these majors, obviously, and Palantir, or do you dive into a lot of the smaller kind of market cap stocks as well? Do you look at indexes, maybe in the robotics section or in energy, or like how do you think about expressing your AI view outside of just Meg 7, or is that really the bulk of it?
No, I think the smaller names are really important. So the Max 7, if you are looking for hopefully 15 to 25% year gains. And again, those are amazing gains on individual stocks. Some of those names have got it this year. Some of those names happen in the Max 7. But I think you go with the Max 7. I don't think you're getting 300, 400% gains, anything crazy like that. But there are plenty of smaller AI names in the ecosystem, whether they're semiconductor derivative names like an Amkor, which is one of the only packaging suppliers for TSMC in their fab in Arizona. That stock has, from 30 to 42 over the past couple of weeks because people are starting to realize they have a real moat and there's not that many other people like them. That's in the semiconductor derivative space, $10 billion company. And then there's other smaller like software AI names that are getting a lot more excitement that aren't as big as like a Palantir or a Nvidia. And a lot of those software names, also the question is how fast can they grow? I mean, that's the biggest question that is on people's minds. So another name like Path, that actually has earnings today. Their stock is up year to date 14%, not the best return, but they are being seen as a robotics processing automation RPA company that uniquely is going to be able to use the elements of AI, that one of the biggest themes around AI is automation, intertwined with RPA. And they're showing some relatively decent revenue growth. Like, could that stock be up 80% next year? I don't know, but theoretically, it's small enough where if they show the growth, it's not a company that has to show like $80 billion of revenue just to be able to move 20%. So I think there's a lot of names out there. There's a lot of gems, a lot of names that have done very well over the past couple of years back in 2023 when everything was down and AI was just beginning. The question is just being able to find those names.
Right, absolutely. One of the more, I would say, broader ways to get exposure to either crypto or AI, in my opinion, is Robinhood. And we've been very bullish on that. And I know you have been as well. As long as you believe that we are in any kind of bull market, whether it's crypto or AI or anything, technically people are going to trade that, and they're more than likely going to do it if they're in the US on Robinhood. And so there's a lot of ways that Robinhood actually indirectly captures this like AI trade and the crypto trade and multiple trades, and like prediction market adoption and sports betting and all the things in one. I know you've interviewed Vlad, and you've been big on the Robinhood stock yourself. Give me your thesis as to what you're seeing with Robinhood and how does that kind of fit in your portfolio?
So I started buying Robinhood at $8 back in December of 2023. I've been using the product since 2018. And the reason I started buying it is because I kind of just looked at the market cap one day, 8 billion market cap, 6 billion of the market cap was cash. And so I was like, okay, so they're valuing the enterprise value of the business at 2 billion. I use it every day. I check it more than I check any other app. Why is it only worth $2 billion? And so I started doing a lot more research on it. Obviously, we had a bear market in 2022. Trading volumes collapsed. Robinhood makes a lot of their money from trading volumes. The company really was only known for like trading meme stocks at the time. And then the whole GameStop stuff that happened in 2021 really left a bad taste in people's mouths. So my investment thesis came down to not only the valuation, but then crypto started creeping back up back in October of 2023. And I saw their monthly October 2023 volumes. It was up 92%. And at that moment, I was like, wait a second. Bitcoin was at like 25K or something. Like, if Bitcoin's about to make a run, and Bitcoin was stuck in a bear market for a year, and like if you believe in any of the cyclical stuff around crypto, it's like, well, this probably should start to evolve. Where are people going to be trading it? It's going to be on Hood. And so that was just the initial thesis that I stepped into the company with. Started posting some stuff on X. Vlad, he sees everything, like literally sees everything. And so he was following a lot of my content. They ended up reaching out to me to do an interview. And so we did the interview. And by the time we were doing the interview, they announced their credit card, which was the 3% cash back. And that credit card, the stock had went from 8 to 20 at that point. So already I was like, goodness, it's at $20 from $8. But the credit card was the segue towards Vlad saying, I'm going to take over the entire world. And that's when you have prediction markets and banking and tokenization and all these different things. And then 2024, 2025 has just been phenomenal for them because they really set the tone for the culture of what it means to be a tech company in financial services that's innovating. And that's why I think they're going to be a $1 trillion company one day. I don't know when that's going to happen, but yeah, I think tokenization, crypto, AI, Vlad's at the intersection of all that.
Does you talked about how a big thing with AI is the rich get richer, and so there's this, everyone talks about the K-shaped economy that's going on in the macro world, which is rich getting richer, and then those that are don't have money, don't have assets, they're getting poorer and poorer, and they're kind of getting left behind. And the interesting thing is Robinhood's main client, at least today, is kind of retail investors, which I think a lot of them, at least in the crypto space, have not done very well over the last couple of years. and so I'm curious, in this like K-shaped economy world, which is only going to get worse and worse via AI, is that a headwind for Robinhood because their user base is maybe going to get a little bit left behind? Or where do you think Robinhood goes over the coming years, and how do they kind of get through all that?
I think it's a tailwind because everyone's going to realize they have to be investors to win. Like if your wages are getting depressed and your money in the bank is getting eaten away by inflation, you literally have to put it somewhere. So then you've got it. So you've got that argument for why I think that could be a tailwind if you do have a K-shaped economy. But then number two, you have this wealth transfer. You've got a lot of boomers that are going to be passing away over the next 50 years, and they're going to be giving their money to their kids. I don't think their kids are opening up a Schwab or Vanguard account. They're going to be on Hood and Coinbase. So I just think the tailwinds are so unbelievably massive for Robinhood's opportunity to capture those trillions of assets. And then the product velocity of Vlad being able to ship. And, I've been privileged enough to speak to Vlad many times. Like, this man does not sleep. He would rather die. He would rather die before not shipping new product. And when you have someone like that, who's at the head of the company, pushing the culture down to all the employees, that's where I think, they can set up for a very good decade-long run. Now, it's going to be volatile because if the market goes up and the market goes down, Hood is very beta to that market volatility. But I think long-term, it ends up working out.
Yeah, absolutely. Well, this is fantastic. I know you've got to go to, I think, a Twitter Spaces coming up, but then you're going to do another YouTube Live. You're literally on podcasts or streaming all day, which is wild. But congrats, man. You're absolutely crushing it. We really appreciate having you on. I know our audience appreciates having you on. We'll have to get you on again, and we'll do a longer, deep dive into AI and some of your favorite trades. But this was a great place to start. So thanks again for coming on. We really appreciate it.
I've been following Milk Road for a long time, and the fact that you guys are transitioning now into AI stuff, I knew you guys from crypto. I just think it's so cool. So I love it. Happy to be on again anytime soon.
Awesome. If people want to come check you out, where should they go?
Twitter. Twitter is probably going to find me at Amit is investing.
Cool. Awesome. Thanks so much, Amit. You take care and enjoy your Twitter Spaces. And everyone else, thanks so much for listening in.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show's for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.